sheer volume of data generated by global markets every single second. Millions of trades move faster than any human can manually process. For decades, elite financial institutions have managed this chaos by funneling it through proprietary terminals, systems that synthesize the noise but charge tens of thousands of dollars a year for access. If you look at the density of a traditional institutional trading floor with rows of dedicated analysts and screens, you see exactly the disadvantage the average retail investor faces. They are completely priced out of the hardware and intelligence required to compete on a level playing field. An open-source project called Daily Stock Analysis addresses this gap directly. It's a free Python script built to replicate the exact daily workflow of a paid financial analyst, and we know this code works in the wild. The repository has amassed over 33,000 stars on GitHub, making it a heavily scrutinized, widely validated tool within the open-source finance community. Open-source code is eroding the traditional barrier to entry, allowing a single script to perform the data synthesis tasks once exclusive to high-cost institutional desks. The primary output of this system is a daily, fully automated decision dashboard. As seen on the digital displays behind the Hong Kong Exchange's Bronze Bull, the system simultaneously tracks equities across A-shares, Hong Kong, and US markets. What makes this accessible to a regular user is its zero-cost deployment architecture. Instead of renting personal servers, the system runs entirely on GitHub Actions, operating on an automated schedule. When the scheduled trigger fires, the script wakes up and starts pulling in live market ticks, technical indicators, and breaking financial news from multiple distinct sources. All of that scattered raw data is then routed directly into large language models. The AI processes the noise, synthesizing the technical indicators into one clean, unified summary document. Finally, the system broadcasts this generated dashboard straight to your device. It pushes the final report through your preferred channel, whether that's WeChat, Slack, Discord, or Telegram. This pipeline effectively turns AI from a passive chatbot waiting for your prompt into a proactive financial analyst that works autonomously to deliver research while you sleep. Beyond the daily automated reports, the repository includes an interactive agent mode, which functions as an on-demand AI consultant. Users can chat directly with this agent and interrogate it using built-in, complex technical frameworks, asking it to analyze a specific ticker based on moving averages or Elliott wave theory. This split-screen chart illustrates another standout feature: social sentiment integration. While the left side tracks traditional financial candlesticks, the right side monitors crowd behavior across platforms like X and Reddit. By pulling data from social APIs and prediction markets like Polymarket, the system quantifies crowd enthusiasm. When it detects a sudden spike in online hype, it instantly triggers a preemptive warning indicator on your financial chart. Collective human psychology often precedes sudden market volatility, much like a massive flock of birds shifting direction in the sky right before a storm. Combining rigorous technical analysis with quantified crowd psychology creates a highly holistic view of market risk, giving you context you would miss by relying entirely on cold mathematical metrics. Setting this up does require technical effort. The primary friction point is configuration overhead. You have to manually source, input, and secure multiple API keys to get the pipeline running. Then there is the issue of systemic fragility. The entire dashboard is completely reliant on the uptime of those third-party providers. If the foundational LLM server goes down, your automated analyst goes down with it. More importantly, AI models are simply aggregators. They occasionally hallucinate facts, and they hold zero liability if their summary leads you to execute a bad trade. Capital markets are inherently unforgiving. No amount of technological convenience or clever open-source code can mitigate the harsh reality of personal financial loss. Open-source automation is doing the heavy lifting of data synthesis once reserved for Wall Street desks, but the final burden of clicking buy or sell remains squarely on the user. Definitive. Professional-grade research no longer requires a 5-figure terminal subscription. It now depends on the user's ability to configure and automate the right open-source intelligence. If this saved you time, hit subscribe. We review tools like this every week, so you're always ahead. Now, if you liked this open-source financial tool, you're going to love our breakdown of AlphaSift.